Hi everyone, welcome to this week's episode of Kickstart Your Real Estate Investing. In this week's episode and in the next few weeks, I'll be going over some common mistakes new investors make when they try to underwrite properties. So this week I'm going to cover a very common mistake which happens is where you try to make the numbers work for the target metrics you're looking for, right? So let's assume you are trying to underwrite properties and you have a goal of making a 10% cash on cash return from the investment you're making. So if you recall from the cash on cash return formula, it is your net cash flow divided by the cash you are investing into the property. So let's assume you're going to invest $100,000 into a particular property and your cash on cash return requirement is 10%. That means you're expecting your net cash flow to be $10,000. Now, the net cash flow formula, if you might recall, is your gross operating income minus your operating expenses and reserves, which gives you net operating income. And from there, you take out your debt services and what you're left with is the net cash flow. So you go through the numbers and you find out that your net cash flow is $8,000. So now you look at it and say, I wanted to have a $10,000 net cash flow so that I could go and get a 10% cash on cash return. So what you can do here is you start looking at all the numbers, right? You can start looking at, okay, what is the gross rent I'm making? What are the operating expenses I have, and what kind of debt services I have, what are some of the numbers I can work with. And a common mistake which is made is we try to now think and say, one of the numbers which really affects this is the gross operating income, which is the rent I can receive from that property. And in your analysis, you might have done and said, I think this property can get me a rent of $1,800, right? So that's the first level of analysis you might have done, and based on what you see in the market, you must have done all your calculation based on $1,800 per month, and that's something which you put in as your gross operating income. But now you might think and say, where am I going to get the $2,000 which I need so that I can make my net operating income to go higher, which in turn will also allow me to get a higher net cash flow. They say, maybe this property can rent $2,000 a month. And then you do a quick calculation and say, yeah, if I do it that way, if I add $200 more into my gross operating income by increasing the rent which I can receive, I can reach a net cash flow of over $2,000 then, because what I have done is I increased my gross operating income to $2,400, which is 12 months into the $200 extra rent, which I think I will get. That's $2,400. My operating expenses more or less are the same. My reserves go high because it's a percentage of the gross operating income, and thereby my net cash flow now also gets a little higher. And my debt services is not changed. I'm going to get the same amount of loan, and I'm going to get the same amount of interest rate. So I have successfully gone and tweaked the numbers so that now my bottom net cash flow has increased by approximately a little bit more than $2,000, giving me the cash on cash return which I need. It works on paper. So you have to be very careful when you try and tweak those kind of numbers, because what you just did, you fudged the numbers so that it meets your goal of a 10% cash on cash return. And it's very easy to do because you look at all the formulas, you look at all the numbers, and then you try to see which numbers is the easiest for me to convince myself that that's the number which can get me there, right? So if you look at all the numbers and you can say, okay, there are three major chunks of numbers I can play with. One is going to be my gross operating income, which is the rental income I can make. The next are going to be my operating expenses. And the third thing is going to be my debt services, right? So I look at all those numbers and say, which is the number I would like to tweak in a positive way so that I can make my numbers. Now, your operating expenses and reserves are normally a negative number. So you're not going to go and increase them or decrease them to a point which doesn't make some sense realistically, though some even try that, right? But you cannot control the debt services because that's more market driven. So you know that you cannot go and get a 3% interest rate in today's market where the market is going at 6.5%, 7%, right? So you normally don't go and make those changes. You try to do it in a more rational, logical way. And you feel by changing the gross operating income, which is basically your rental income, you can successfully get the numbers you're looking for. And that's a very common mistake which is made. So a thing to learn here is that it is very easy to get caught up in this kind of analysis to come up with a positive way in which to reach your numbers. So my suggestion is do not do that. If the numbers do not work, the first time you put all the numbers in, if they don't work, you need to walk away. You need to walk away and say that this deal is not going to work for me. There could be other deals which are better than this. So do not go and change numbers just to meet a particular metrics which you're looking for. So this is a very common mistake which is done, and we all get caught into this by thinking and being more optimistic about the future and say, yeah, there is a very good chance the rents are going to go up and they'll always keep going up, which is not always the case. When you have recession, when you have bad economic conditions going on, rents can go down. People lose job, people cannot afford the rent. So all kinds of things do happen. So when you are underwriting a particular property and if the numbers do not match, do not go and fudge the numbers to make your metrics work and to buy the property. So this is where you might want to take a step back, look at all the numbers and be honest to yourself. If a particular metrics cannot be met, then you need to look at other investments. You need to look at other investment which can make your numbers work for you. Okay, hope you like this episode. Next week I'll cover some more of this kind of mistakes which happen. And if everything looks good to you, please go ahead and like and subscribe to my channel. Thank you. Bye.